Regionals versus capital cities. Which one will actually make you rich faster? Today, we're going to answer that exact question and uncover your best bet heading into 2026. Spoiler, it's not as straightforward as you think. Hi everyone, I'm AJ, Director of Handle Properties. We've helped hundreds of Aussie investors secure high-performing interstate investment properties to fast-track their journey towards financial freedom. With an average return of over 12% within the first year of ownership, our mission is to create equity fast and to help you scale your property portfolio. If you're looking for a strategic buyer's agent and mortgage broker, check out our website and click on the link to book a session with us. Now, back to the question, regionals versus capitals. This is a question that we think about almost daily. Let's start with capital cities. The attraction is obvious. Larger population, blue chip locations, better migration and job opportunities, and long-term scarcity as the cities continue to densify. Over time, these drivers mean capital cities are reliable performers. They often deliver long-term equity growth. But here's a catch. Higher buy-in prices, lower yields make it harder for first-time investors or anyone with a more modest budget to enter capital cities. But here are 4 golden rules when we do think about capital city investing. Firstly, we want to buy land. Land is scarce, so we focus on houses or townhouses that have a good amount of land content, not just shiny new apartments. Secondly, we avoid undifferentiated stock. So think about new builds on tiny parcels of land or high-rise apartments where there are hundreds of copies of the exact same type of product. Thirdly, we want to make sure there's access to employment hubs. So look for suburbs with strong public transportation that are actually under 45 minutes to major job centers across the city. And finally, assess socioeconomics. Higher household incomes, better schools, and desirable amenities signal long-term demand. Now let's move on and look at regionals. The arguments here are also very compelling. Firstly, they're more affordable in terms of the entry points into the market. They typically have stronger rental yields, and you get a lot more bang for your buck when it comes to land sizes. The affordability race means demand continues to flow outward from capital cities into a lot of these regional towns. For new investors with only $500,000 to spend, buying in a regional town often makes far more sense than squeezing into a tiny Sydney apartment. Here are the 4 must-have things when thinking about picking up a property in a regional town. Firstly, aim for regional towns with populations more than 20,000. Secondly, we want diversified income, not just from the local mine or tourism. We also want decent incomes to support the growth of rent over time. And finally, infrastructure investment on the horizon is a massive bonus too. Now, once we get these in place, we also look into a lot of property-specific metrics such as stock on market, vacancy rates, etc. to assess the true opportunity. So which is better? The answer depends on you. If you're starting out with a limited budget, if you're yield conscious and want to build your base very quickly, then regionals may be the smarter play. They reduce your holding costs, allowing you to scale more quickly. Whereas if you're on a high income already with strong borrowing capacity and can afford lower rental yields, capitals are where you can really buy those true chip properties that have a lot of scarcity. These properties cost you more to hold, but can deliver you some serious equity growth over the longer term horizon. Now let's swap gears and talk a bit about numbers. In the past 12 months, suburbs such as Kirwan and Townsville have grown over 20%. And it's not isolated because the same story is true for areas such as Mackay, Gladstone, and many others. But on the flip side, places like Perth, which is a capital, have had similar kinds of capital growth only just a year ago. So what's the lesson? Well, both regionals and capitals have their moment in the sun. Timing, selection, and strategy matter more than just the label that we give these areas. So regional or capitals? Well, the truth is both can make you rich faster. The right choice comes down to where you are in your property journey, your budget, and also your personal goals. At Handle Properties, we don't like pushing one over the other. We want to look at the data, timing, and your personal situation to decide which one of the 2 might actually be best for you. As a bonus, here are some of the capitals and regionals that we have as our top picks. Within capitals, we're really excited about many pockets of Melbourne as well as Perth moving into the next 12 months. In terms of regionals, Ballarat and Bendigo are doing fantastically well, so they're definitely areas that you might want to watch too. If you found this helpful, hit like, subscribe, and drop a comment on whether you're team regional or team capital. And if you want help picking the right market for your situation, reach out to us at Handle Properties. We'd love to help.